strategy was a big buyer in the short term, and institutions are coming, but they may not be here yet. Bitcoin did shrug this off. So how do you guys land on this conversation of, is this going to create like a gap where we're trying to find a new buyer in the short term here and we don't know who that's going to be? Or is this more of a sign that, hey, Bitcoin doesn't really need strategy anymore and the market's turning bullish and we're going to keep climbing from here? Matt, what do you think about that?
I mean, look, the history of Bitcoin is a history of the largest buyer handing off the baton to the next group of capital, right? So before strategy, it was GBTC, who bought a ton of Bitcoin. I think they got up to 600,000 Bitcoin or something absurd like that. Before GBTC, it was US retail investors. Before US retail investors, it was Asian retail investors. Before Asian retail investors, it was cypherpunks. And even if you go back to that beginning, right, people were like, well, who else will buy? Everyone who's a cypherpunk is already in Bitcoin. What is the next marginal buyer? And the answer was there was this series. It was like a Russian doll of marginal buyers. The good thing about the point we're at right now is we know who the next marginal buyer is the end boss of investing. It's institutional capital, which is talking about trillions upon trillions of money, of dollars. And we feel very confident that it's going to come into the market. In fact, we're meeting every day with financial advisors, with clients, with sovereign wealth funds, and they are all still interested in this space. So almost unlike all those previous examples where there was really this question of who would be next, right? We weren't talking about digital asset treasuries being the driver of Bitcoin during the peak GBTC days. We were like, I wonder what's next. The answer now is clear, which is institutional capital. I think they're going to take the baton and run with it starting at the end of this year and accelerating for a number of years after that. And I think it's going to be a great bull market for Bitcoin.
Well, speaking of the final boss of institutional finance, Vanguard is an $11 trillion asset manager that had sworn and they refused to do anything with crypto. They announced, I think just yesterday or the day before, that they're going to be hiring a new head of digital assets to develop the firm's strategy for going into crypto and digital assets here. Ryan, let's come to you with this question. What does this mean for this baton passing, and what is the market signal that this is sending that Vanguard is coming into crypto?
Yeah, well, I think this is a signal of that baton passing. We've seen it, as Matt mentioned, pass among buyers, and now we're seeing it pass among major players in the space. You had the early exchanges that were offshore, unregulated. Now you have massive onshore US-based exchanges, the Coinbase, the Krakens of the world, publicly traded companies that are facilitating this stuff. And then you have BlackRock and Fidelity and Franklin Templeton, and of course, Vanguard. And I think that's a natural evolution of an asset class that's building out institutional infrastructure. That is the biggest market, an addressable market that we could go after. Vanguard is trillions and trillions of assets and millions of clients who now are getting access to crypto, who now will have a head of digital assets, kind of bringing them products and bringing them access in a way they didn't have access 2, 3, 4 years ago when strategy and DATS and GBTC were the major buyers of Bitcoin. So I think it's just a continuation of this trend that we're speaking of, where we're transitioning into a mainstream era of crypto where institutional investors and institutional infrastructure drives the next wave. And it's not a small wave, it's a tidal wave that's going to drive multi-year tailwinds for the crypto industry at large.
Yeah. If I can just toss one thing onto this, we've seen this before, right? We talked today about BlackRock being this huge positive force for crypto. We're a handful of years removed from Larry Fink calling Bitcoin an index for money laundering. So this conversion process is something we've seen before. And what happens is once they're converted, it's a one-way door and they begin to build in this space. I'm not surprised at all by this Vanguard announcement. I come from the ETF industry. Vanguard originally hated ETFs. Now I think they're the second largest ETF manager in the world. So look, they were going to come around to crypto and digital assets eventually. This doesn't mean they're yet all in on Bitcoin, but it is a one-way door, as we've seen with BlackRock, as we've seen with other institutions. To go back to our original conversations, as we saw with Michael Saylor himself, which famously tweeted in 2013 that he hated Bitcoin. And now we're talking about him being the most largest buyer for a handful of years. So this is a tale as true as time. Eventually, Bitcoin conquers and crypto and digital asset conquers the entirety of finance. This is the way finance will work in the future.
We are at a very crucial point in time right now. AI stocks have ripped. They're going to keep ripping. Our analysts on the AI side are up like literally 100% or more on quite a few calls. And crypto is about to boom again, or at least it feels that way. If you want all the insight on what we're buying, what our analysts are doing, what's on their watch list, all of that is in Milk Road Pro. So join at the link below.
Oh boy, I'm getting bullish. Okay, I want to ask a question around this. In the past, there was something people would call career risk on Wall Street of getting involved in crypto and sort of being seen as a pariah. Do you think now in this next cycle that this has flipped that conversation to where now there's career risk to not having a strategy around digital assets? And what does that look like as it starts to play out in this continuing institutional bull run we're seeing? Either one of you can go with this one.
I would love to jump in there. Yeah, I hit my Jeopardy.
Fast, Ryan. I'm impressed. Go ahead.
Yeah. No, I would just say, look, I mentioned this earlier. I've been on the road with clients this week. In particular, there's been a few points of evidence around the fact that it is becoming increasingly something that financial advisors and RAs in particular need to offer clients in order to retain and grow their business. Now, it's not the end all be all, of course. Clients are worried about a number of different things and they'll grow their businesses in a number of different areas. But what we have heard directly from our clients is that they have clients of their own who are asking for crypto exposure. Some just want Bitcoin. Some say they want Bitcoin, but actually want crypto. But what's important is that they're asking their financial advisors and money managers about getting exposure to the space. And if you're a financial advisor and your clients are coming to you and saying, hey, I want to own Bitcoin. Do I own Bitcoin? And you say, no, I don't believe in that. Or worse, you say, I believe in it, but actually we don't have any products that we use to get exposure to it. You risk losing that client and losing those assets. And that's a real problem for money managers. So I think from that perspective, there is certainly risk. And then I would just add one other piece of evidence here is that we've been speaking a lot recently with allocators. These are pension funds and endowments and other large allocators of institutional capital. And what they've said is that as more and more peers allocate to crypto, it reduces the career risk of them allocating to crypto themselves. And it's not this linear relationship. Every time one major endowment allocates to crypto, it makes it more likely that the next 5 will allocate and so on. And so I do think the career risk element is real, but it's actually a positive tailwind now, whereas 5 years ago, it was a headwind.
Yeah, I think that's absolutely right. If I can throw on one other headwind, tailwind, which doesn't get spoken enough about, you look at that Vanguard offering, they're asking for 10 years of experience in financial services and digital assets. That was actually impossible to ask for a handful of years ago because we weren't 10 years old. The other thing I think about is, think about when most sort of traditional investors got their first whiff of Bitcoin, which is really 2017. You had a whole rash of people on Wall Street who were 25 to 30 years old who learned about Bitcoin in 2017 and have been following it now for 9 years. When they learned about it, they were a junior associate at Morgan Stanley or Goldman Sachs or whatever. Now they're 37 years old and they're managing directors. And these are the people who have grown up with crypto for 10 years. We've never had this experience. So I do think it's now a risk to be anti-digital assets. You look like you have your head in the sand. But also we have sort of a class of financial executives that are prepared to lead these initiatives at major firms who have been following this space for 10 years. And that demographic trend will only strengthen for another 10, 15 years, which is part of why I'm confident it will take over sort of huge chunks of the financial ecosystem.
Matt, I'm very glad to hear that you've read the job description. I just want you to know that when you sign the contract, make sure there's a clause that says you can keep doing the interviews at Milk Road while you're running things at Vanguard, because I'd be heartbroken if we lost you. Ryan, do you want to go with you?
I'm glad you picked up on that, John, because that was a little concerning.
Right. Come on, boys. You'll pry me out of Bitwise when I'm dead. Bitwise for life. But I love finding, I love reading those. I do think it's instructive, right? Like you didn't have the possibility to even ask for that a handful of years ago. And now that's what they're looking for. I think it's an important signal moment.
Yeah, I also
The-
think
the-
I would just add to that, like think about the experience someone who's been in crypto for 10 years and in financial services for much longer can bring to someone like Vanguard. They're not hiring someone who has no crypto experience and saying, hey, we need to catch up in digital assets, go do something. They're going to hire someone like Matt, who's been in the space for a decade or so and understands crypto intimately at every single level, importantly understands the history of crypto, the trajectory that it's on and that it's been on. And I think that will inform how they approach the space. And that just means we're going to have more sophisticated and better products and companies and access points overall as an industry. I think that's really important.
Okay, so I want to follow this thread of this progression and institutions coming to crypto. Matt, I saw you tweeted this out just this morning that DeFi has been showing a lot more strength than a lot of people expected with the recent hacks and so forth. You said that a lot of people thought that the total addressable market of DeFi was crypto, which is around 2 trillion, but it's really more like all of finance, which is closer to 400 trillion. Walk us through a little bit of this thesis here and just, your thought process on this.
Want insights on what's moving crypto markets and how we're trading each event? Subscribe to our channel and join the Milk Road Daily and Pro newsletters and start investing like the top 1%. This show is for educational purposes only. Nothing we say is financial advice. Investing is risky. Never invest more than you can afford to lose.